please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You've joined us on Business Lunch. I'm Nisha Podar and with me is Mangalam Malu. Mangalam, good afternoon. It's a good day of trade today as far as the frontline indices are concerned. So take a look at Nifty 50. It's way above the 11,050 mark and comfortably settled there. It's Reliance Industries which is really aiding the rise along with the HDFC twins. But what's really not doing well in the markets today is the IT sector. TCS as well as Infosys both were roaring in trade yesterday and have been seeing some profit booking. Also, Infosys results is just around the corner. But mid-cap universe, that's not really participating as well as the frontline indices are. So that could be a spot of worry, Mangla.
Absolutely, but we'll have to keep an eye out on the Nifty because the fact that it has crossed the 11,000 mark is fairly important for the July series itself, because the 11,000 call, that one had the maximum open interest. And if you take a look at the 11,000 call, there the writers are, covering their positions. They believe that 11,000 mark will hold for the Nifty. That is something we'll have to watch out for, because the bulls believe they can go ahead and defend the 11,000 mark. If you take a look at the 11,000 put, that one should come up for you. Out there, we've seen a lot of writing. So as the markets are moving higher, 21 lakh shares have been written there for a premium of 77 rupees. That's telling you that maybe 10,900 to 11,000 could be a strong support zone for our market. So that is something we'll be watching out for. But remember, yesterday we were outperforming the globe. Today also we are outperforming the globe as far as the European indices are concerned. We're seeing a bit of a pullback in the European markets. The Asian markets too opened in the green and extended their gains. But if you take a look at the Nikkei, that one was the key outperformer out there on account of a weaker yen, doing good for the Japanese exporters. The Shanghai markets, they pulled up from two-year lows as well. So the Asian markets were doing well, and the Indian markets doing even better because of the weakness that we saw in crude prices.
Get back home then to an important development. A month after CNBC TV 18, remember, reported that both the potential buyers and IDBI Federal Bank deal have backed off. The insurance regulator has sought clarity from the company on behalf of the policy holders. Yash Jain reports on what really lies ahead when it comes to the IDBI Federal Life now. Tell us, Yash.
Well, Nisha, as you rightly pointed out, this relates to the IDBI Federal Life transaction. And just about a month ago, CNBC TV 18 had reported that the two potential bidders or buyers, which were Max Life Insurance and Aditya Birla Sun Life Insurance, had backed out of this particular transaction. But do remember, it's been a month since then, and there has been no clarity given from the shareholders, that is IDBI Bank and Federal Bank. And this is exactly the reason why the insurance regulator has now jumped into the ring, asking the shareholders to give some clarity as far as the direction of this particular transaction is concerned. The insurance regulator believes that this is concerning the policyholders and they need clarity in terms of where this particular transaction is really headed at this point of time. At the same time, I'm given to understand from the other side that the two shareholders, after this concern which came from the insurance regulator, are likely to clarify to the exchanges, giving more clarity in terms of the direction of the IDBI Federal Life transaction. And most probably, that's going to be in the form of the shareholders calling off this particular transaction formally, by which they intended to sell 100% when it comes to the IDBI Federal Life as the life insurance company.
All right, so that's the clarity is sought. But Yash, if this particular deal does not really go through, as is evident now, is one supposed to really assume that it's going to be business as usual at IDBI Federal Life Insurance, also with the parent company and a lot of talk on the LIC buying into IDBI Bank also right now taking a lot of momentum, picking up speed as well?
Well, Nisha, a simple answer to that question is going to be no. I'll tell you why. It's a very tricky situation right now for IDBI Federal Life Insurance, because if you talk about the transaction on one hand, it's going to be very difficult, in fact impossible, for them to restart the bidding process and kickstart the transaction again, because the most important part which was really driving the value for the company was the bank assurance. And now that bank assurance, if LIC raises its stake in IDBI Bank, is going to be shared with the Life Insurance Corporation. They will also be allowed to sell their products via the bank branches of IDBI Bank and Federal Bank. Now, of course, it's kind of understood that IDBI Federal Life products will face a very tough competition, and the buyers will also be less interested in buying because they'll have to compete with directly LIC products when it comes to the same platform. if we talk about business as usual, that is also going to face a very tough challenge, because IDBI Federal Life right now is selling its products via that bank insurance channel and gets a significant portion of its premium from that particular channel. And now LIC, once it starts distributing its products via that particular platform, it's going to be very difficult for IDBI Federal to compete with LIC products on the same platform.
All right, so lots of clarity sought there, and we'll keep an eye out on that particular development as well. Thanks, Yash, for giving us all the latest details coming in on IDBI Federal Life Insurance. Now, let's take a look at the markets once again. And Nifty 50, that has lost a few points in the last few minutes of the trading session, but still holding on above that crucial 11,050 marks. The bulls are firmly in charge, with the Nifty reclaiming above 11,000 mark for the first time since February 1st, and with the Sensex really hitting a record high as well. Manglam is getting us more details on this particular rise. Manglam.
While we're back at the 11,000 mark, the first time since Feb 1st, a couple of data points really stand out. The fact that we're above 11,000 mark, it's been a thin rally. Only 20 of the Nifty stocks have been in the green since those levels. In fact, 30 of the Nifty stocks, which is 60% of the index, is still below the Feb 1st level. So let's see the stocks that have led this move since Feb 1 back to that 11,000 mark. The biggest boy out there has been Reliance, up about 12%. The private sector quality names we're talking about, money has changed a lot of the quality. We have Kotak Mahindra Bank, HDFC Bank, both of them playing their contribution out there. TCS, Infosys as well has done fairly well. The twins, Bajaj Finserv as well as Bajaj Finance, have led this rally. Along with that, we have the consumer names that have also taken the Nifty back above that 11,000 mark. But all is not well as far as the larger sector of, or the larger segment of the index is concerned. ICICI Bank about 22% lower. Oil prices moving higher. OMCs, not good news for them. Despite the up move that we're seeing today, they're still down anywhere between 22 to 29% since February 1 levels. Tata Group companies, Tata Motors in particular, as well as Tata Steel, not doing too well, taking away whatever TCS has given. And keep an eye out on Vedanta and UPL as well. They're the ones which have underperformed this index. But we talk about mid-caps. Out there, the gains are a little more narrow. We have only the IT pack as well as the consumer pack doing well. Two-thirds of non-index F&O stocks have been in the red. So take a look at all the IT stocks, anywhere between 30 to 40% higher since Feb 11. And then you talk about the consumer stocks. Well, Godrej Consumer up 25%, Page Industries up 35%. You have Jubilant Foodworks as well as Nestle, all of them sitting very close to their record highs. In fact, most of them are at record highs as we speak. Now let's talk about the losers. And I'm not even talking about the Wakrangis and Manpasands of the world. We have PC Jewelers down 73%, and this is just in the last very few months. HCC down about another 70%. PNB, the Nirav Modi scam, taking that stock down by around 55%. We have the likes of Reliance Communications, Stride, Sassoon, Suzlon Energy, Balrampur Chini, Adani Power, all of them sitting with cuts of anywhere between 40 to 45%. And then you have Syndicate Bank as well as Idea Cellular, Adani Enterprises and BEML as well, all of them sitting with cuts of in excess of 40%. So for a larger segment of the market, the cuts have been deep, the cuts have been wide, and for the good quality stocks, we've seen good gains and they've supported the indices.
All right, Manglam, thanks for pointing that out. So even if Nifty 50 has reconquered that 11,000 mark, it's only comprising of the 50 blue chip companies, while the mid-cap universe, a large part of that, has seen deep cuts. In fact, if we'll take a look at mid-cap index year to date, that has really fallen quite a bit substantially. And that's mid-cap index for you today, underperforming in the markets.
Divergence in moves as far as the large caps and the mid-caps are concerned. Just keep an eye out on the Nifty, closer to that 11,060 mark as we speak. HDFC Twins doing fairly well at the high point of the day. And if you take a look at the contribution out there, you have Reliance holding up on one end. Now you're getting in some support coming in from the HDFC Twins as well as a couple of these stocks. They're moving off the low point of the day. Infosys has recovered a little from the low point of the day. There you have it. Reliance hitting a near half century out there. Add L&T and HDFC Twins to that. You have that explains the sort of move that we're seeing on the Nifty. But the mid-cap index, on the other hand, just 18 points away from dipping into the red mark. So the mid-cap index is virtually at the low point of the day. Along with that, we have a lot of these stocks which are taking it on the chin as we speak. PTC at the low point of the day, a sharp fall on United Breweries as well as Reliance Infra. Bharat Forge too actually has slipped just as we speak, and that one slipped hard, about 0.75%, most of that coming just in the last 15 odd seconds. So there we have Bharat Forge as well sitting at the low point of the day. Mid-caps not doing too well. The large cap index still holding at the high point of the day. But the big story of the day, the big CNBC TV18 exclusive, as the government clears the national telecom policy for 2018. Telecom Secretary Aruna Sundararajan says to CNBC TV18 that they are not looking at revenue maximization, but they're looking at broadband for all. On the Idea-Vodafone merger, she says that this deal will go through without any hitches. Listen into that conversation.
We believe that despite the current stress in the sector, that is a short-lived phenomenon. We fully expect to see that with the current rounds of consolidation that are happening by the end of the year, the sector will settle down, and after that, these telcos will be able to harness the growth that lies ahead. The broad signal is there. You've heard the telecom minister, Mr. Manoj Sinha, also mention that it is not revenue maximization that the government is looking at, but government will look at ensuring broadband for all. The minute that the new merged entity or VODA or Idea, as the case may be, once they comply with those conditions, we expect that there will be a very smooth, we'll be taking it on record, and then the companies can move on from there. So at this stage, we do not expect any hitches or any hiccups. We believe that we have already issued the letter, and now it's for the company to come back, report the compliances, and then move ahead with the merger.
All right, let's shift focus to the pharma sector as well and take a look at Dr. Reddy's. That's gaining in trade, up above 3% in trades today after UK-based Indivior, I beg your pardon, warns the investors of their 2018 guidance. Let's take it across to Ekta on what's the correlation between this guidance and why is Dr. Reddy's up on the back of that? Ekta.
Well, that's primarily because of the drug Suboxone. Now, Indivior is basically the manufacturer or the innovator of Suboxone, which is an anti-opioid or drug addiction drug which is sold in the US with a market size of around $750 million. Now, Indivior came out with a statement yesterday to the exchanges in UK and said that they might not be able to meet their 2018 guidance. In fact, and one of the key reasons for that was because of Dr. Reddy's possibly entering into the market for Suboxone generic in the US, and that would probably impact sales to up to $25 million in 2018. Now, remember that Dr. Reddy's received approval from the US FDA just a couple of weeks ago, and they had launched, or they were planning to launch Suboxone at risk, but what took place was that Indivior basically moved against them in the court, and currently there is a temporary restraining order against Dr. Reddy's from selling Suboxone in the US market. So while that particular litigation is pending in the US courts, and we're probably going to hear about it in just the next couple of days, the important point to note is that Indivior has probably indicated some hesitation in this, and that is probably bode well for the stock, that maybe the street is more optimistic about the opportunity from that drug for Dr. Reddy's.
All right, thanks a lot for that, Ekta. Dr. Reddy's, the stock up 3%. The mid-cap index virtually in the red as we speak. But one stock which is up about 1.5% is HCL Tech, in focus as the board will consider a buyback later today. Rima joins in with all the details.
Yes, awaiting details of the buyback from HCL Technology. It will become the second IT company after TCS to do a buyback this year. Well, if it's a 10% buyback, which means 10% of its net worth, which the company can do with just a board approval, then the buyback size could be up to 3,700 crore or about 2.7% of the equity. If they seek a shareholder nod, then they can do a buyback whose size can be 25% of its net worth, which is roughly 9,200 crore. Now, the company has sufficient cash of close to about $1.5 billion, and promoters hold about 60% stake, and they are expected to participate. But the street expects the buyback size to be similar to what they did last year. So last year, the company did a 3,500 crore buyback, which was at a 17% premium to the prevailing market price. Now, the stock has already run up 6.5% this week since the buyback announcement was made. So it's already quoting at close to about 1,000 rupees per share. So another 15% from here could put the buyback price close to about 1,150 rupees per share. But we await the actual details from the board today.
All right, thanks Reema for taking us through HCL Tech. But another stock on our radar is GSK Consumer Health. Take a look at that particular counter. It is at the lowest point of the day today right now and is down almost 1.5%. And as the race to buy really GlaxoSmithKline's $4 billion consumer nutrition business really heats up, CNBC TV18 learns that the formal bidding process is likely to be launched over the next 10 to 15 days. And FMCG majors like Nestle, Coca-Cola, ITC, HUL are likely contenders for this particular business. My colleague Priya Sheth joins us with the details on what's happening on the bid timeline and how is it looking like. Priya.
Well, interest seems to be pouring in for GSK's consumer nutrition business. In fact, what we do understand from our sources is that the formal bidding process is likely to be launched over the next 10 to 15 days. And the bidding process is likely to be conducted from GSK's global headquarters is what we do understand. Now, the non-obligatory first bids, we understand, are likely to come in by next month. And that's perhaps going to set the ball rolling as far as this overall deal is concerned. Final negotiations as well as the sale process could take anywhere between 3 to 4 months before finalizing. But of course, the likely contenders as far as this strategic buy include FMCG majors like Nestle, HUL, ITC, Coca-Cola, as well as private equity firm KKR. And that's a space that we will continue to watch. But do remember that Horlicks and Boost make up a significant part of the domestic malted food market. So any acquirer could perhaps cement their spot as far as the nutrition market is concerned. Now, in fact, we did write to all the companies concerned, and GSK said that the strategic review announced in March is ongoing, and they hope to conclude that by the end of this year. ITC, HUL, Nestle, as well as Coca-Cola said that they do not want to comment on speculation.
Take a look at the markets. The mid-caps have lost ground completely, still holding in the green, but just holding it by the teeth. You know, the most of the stocks that are really falling have been touching the lowest point of the day. Some of the stocks that are on my radar currently, Torrent Pharma reached the low point of the day right now is Gen Irrigation, which has also slipped in trade. Federal Bank, which is also on the downward slide and taking the mid-cap index down as well. Bharat Forge is another counter that you can really keep on your radar. So mid-cap universe not looking good, while it's optically good because Nifty 50 is still holding above that 11,050 mark. All right, let's shift focus then. The personal loan segment in India has grown consistently for 15 years and offers tremendous scope for the company, says George Alexander of Muthoot Finance. And he adds that the company hopes to grow this product portfolio to 3,000 crore rupees by FY24.
We've just launched personal loan in Telangana and Andhra Pradesh. We have a long-standing relation with our customers. We're the largest gold loan NBFC in the country. And what we noticed is that, you know, we have built a big franchise. You know, we have around 4,400 branches, and using this franchise, we felt one of the products that we can definitely give to our customers is salary personal loan, because internally when we did a study, we noticed that good number of our customers are salaried employees. And something else also we saw encouraging is, you know, good number of customers are today actually getting their salaries in bank account.
Sure.
Good number of we are able to do a credit check of our customers, and also that, you know, you're able to do the electronic debit, monthly electronic debit. So all this were encouraging us to, you know, start the salaried personal loan for our customers.
Well, George, if I can ask you, what is the kind of minimum salary, you know, in metros, non-metros, and what's the kind of, you know, is there any benchmark for maximum salary class that you're targeting through this?
So, as far as metros are concerned, our minimum salary requirement is 20,000 rupees. And as far as upcountry locations, you know, smaller towns, our minimum salary requirement is 15,000 rupees.
And what is the kind of loan size that you're offering? Any range?
Our average ticket size varies between 1 lakh to 3 lakh. and depending on the requirement, we go all the way up to 3 lakhs.
Well, the most important question is, of course, the kind of interest for repayment.
Correct.
What's the range of interest for repayment?
So we vary between, depending on the credit profile of the customer and whatever our credit underwriting comes up with, we vary between 14 to 21%. That's what we charge.
What are the cities or states that you're launching this product in currently? Any target for the entire portfolio size for this fiscal year? Any outlook that you can give?
So we've actually started this product almost maybe 6 quarters ago. We've just testing the product. We just launched it in Telangana, Andhra Pradesh this week. Last week we launched in Tamil Nadu. So by maybe end of this week, this product will be available on the big cities of South India. Our target is to reach around 300 crores by the end of this year and 3,000 crores by FY 2023.
Investment into Muthoot Money, is that something that we're going to hear, the fine print of anytime soon?
Yeah, so you will hear about this most probably when we announce our results, maybe next 3 weeks from now. That's also something that we are adding to our portfolio. More news will be coming on that very soon.